First up, we have a story over on Reuters. This is Robinhood's latest raise. So trading startup Robinhood has raised $323 million, achieving a $7.6 billion valuation, which is a whole lot of money. So Robinhood said on Monday that it had raised $323 million and a new round taking that big total up there. So the round was led by DST Global with participation from investors including Ribbit, which is fun to say, and a bunch of other people. 7.6 billion. I can't help but just think like that's a very, very large number. And also players like Nutmeg have really just let themselves go.
Right. The difference between a Robinhood and like even a Charles Schwab, like these guys have 4.5 million customers, mobile only. Like the first generation of that, like Nutmeg, Wealthify, well, sorry, that's unfair to Wealthify. They're probably arguably second generation. But the ones that are mobile only seem to just have different kind of growth. And maybe that's where they're at in the cycle from an investment perspective.
Very true. What do you think, Val?
I mean, last year at TechCrunch Disrupt, their co-CEO said that they were actively looking for a CFO because they're targeting or getting ready to do an IPO. So obviously, the kind of a fund round or a fundraise within a year of the last one, obviously at a much higher valuation, that kind of implies to me that they're gearing up towards it. Obviously, the hire they did make was later that year. Jason Warnick, who'd been with Amazon for almost 2 decades by that point, and he's their CFO. So they're definitely well prepared now.
So interesting positioning, you think, for an IPO?
Yeah, I mean, you think back to when Monzo, kind of when they were looking for a CFO and they accidentally left in the job description on the website that you'll be doing an IPO in 3 years' time. Normally when you kind of do a change of CFO, it's because you're gearing up to an IPO, and obviously another fund round putting you at a 7.6 billion valuation. So all the kind of signs are there that it's quite imminent for them.
What do you think?
Yeah, first of all, I just want to say amazing brand name, because I mean, even Simon was saying he's going to sing to us Robinhood. So and actually the founder story.
Go on, Simon, do it.
Robinhood, right?
Just get it out of your system now, then we can move on. Yeah.
I think it really plays well into the founder story of being around during the Occupy Wall Street movement and kind of thinking, well, actually, we're part of the problem here and we can start giving back to people. And I think the most compelling thing for me is just eliminating that kind of hurdle cost of the commission to enable people who potentially felt maybe a bit nervous about, going to a broker, right, and starting to trade. It was usually the kind of domain of the pinstripes and braces guys in the city. And I think that's really what's propelled them to massive success.
I mean, somewhat like Robinhood, a little bit illegal sometimes, stealing money from people. Not that this Robinhood have been stealing money, but they definitely had some problems with actually how they've gone to market, right? The idea of, was it a checking account or a savings account that they announced when they haven't actually run it past the regulator? So, I mean, that's slightly
rebellious like
sort of streak, shall we say, is definitely in there,
But I think what's also interesting is that obviously you read so much about British fintechs, trying to go over to the US, and they're obviously one of the ones that are trying to come here. They announced their plans back in January. They hired Vander Rutgers from TransferWise, and they sort of said, we're gearing up. They didn't have FCA approval then, so perhaps this is also a caveat that from an investor's perspective, you get your approval from the FCA and then the money's coming in, or this is going to be a catalyst to help them get that approval.
And they've started something in the incumbents as well. So you see Charles Schwab and others and JP Morgan are now starting to look at that subscription model where you pay a set monthly fee and then you get all you can eat trading activity throughout the month. And then Free Trade have gone a similar way in the UK, which would arguably be an equivalent. And they're growing like crazy at the moment, sort of 1% a week or something daft.
I think that Free Trade is quite an interesting concept as well, because I think what's interesting to see play out is how community becomes a kind of moat, and Free Trade have done the community thing really well in particular. And I'm interested to see how that plays out for Monzo going into the US, for instance, and not having that. Revolut doesn't really have a community as such, and Starling shut down their community.
It's interesting as well that all of the companies you just named, though, regardless of the community piece, solve a real customer problem mobile first and sometimes mobile only. And actually, that's the one thing that stands out whether they do community or not. Community is a superpower, but it's not the only superpower. We've seen, you can throw Revolut in there as well. They do have a community around it. But we're seeing all of these different ways to do it. But they all start with that beachhead. They all start with that one problem they solve. For Robinhood, it's like investing scary. I don't trust this. It's overcomplicated. Free trade, similar sort of thing, but more of the community angle. With Revolut, it's that best travel card in the world. Monzo, Starling, best everyday current account in the world. Like there's that thing that they do, and then they sort of expand from there, and that seems to be a consistent theme.
I mean, if you're free trade right now, what do? Like, to your point, Val, these guys are kind of coming over here. They've got a 7 billion valuation. Are you like quadrupling down on, gaining market share right now before they get here? Or?
I don't know, because like with Revolut, right, they obviously had announced plans to launch a similar sort of offering. And, I know the team at Free Trade, and they sort of said, yeah, it's good. Like, bring on the competition. If anything, it's just going to mean that more consumers are waking up to this kind of way of investing. And ultimately, the more players there are in the market, then hopefully, we'll get a good piece of the pie. So they do have a great brand, Robinhood. They're very well known in the US, but then, as you say, they have had a few, challenges on the PR front. So, that could, they've got to really manage that this side of the pond. Whereas Free Trade have had, so far a pretty squeaky clean reputation.
But they are earlier, right? Free Trade has 35,000 customers in the UK. Robinhood, 5 million customers. Acorns, 4 million customers. Acorns seems to have gone a bit of a different route. They're more of the micro savings every day into investments later. Robinhood is that sort of trading activity for consumers. Again, I just stand back from the whole thing and watch it. I loved your point, though, Val, about that this is US going to UK with a different beachhead. After all of the hullabaloo, that's a fun word, of the UK challengers going to the US, it seems like fintech is going global.
But also that if you are a fintech somewhere else in the world, probably your first place that you're going to go outside of your home market surely has to be the UK. If you're going, if you're a fintech.
I think so, and particularly because of the regulatory environment, right? It's big the friendliness from a regulation perspective, and I guess common language to a certain degree, actually allows that import-export really there. I mean, it's one of the reasons why Hong Kong's been such a successful next step for anybody from here as well. Sorry, you were going to say?
I was just going to say that one of the interesting things I think is one of my questions about trading apps is kind of where does it go? Because actually, we've not had a downturn since the advent of trading apps, right? And you're giving access to people who don't necessarily have a level of sophistication that they should have, or, testing how diversified they are and things like that. And so what I'm wondering is, how does this play out in a downturn if everyone's sunk all their cash into shares on Robinhood?
I mean, I think it's an interesting thing on a downturn, but actually is it provoking the wrong behavior in consumers from an investment perspective? Because, I mean, just because everybody can buy shares every day doesn't mean everybody's suddenly like they're shorting stocks to kind of make profit type thing. Bizarrely, like me, Zoe and Jason were talking about this when we were coming back from Cardiff yesterday, the best people who buy stocks and then leave them from as long as almost forget about them in order to ride out all of the peaks and the troughs that are eventually in the stock market to make some sort of benefit. And that's where actually like this type of behavior is more like cryptocurrency vibe. I wonder a lot if the Robinhoods and the free trades are actually slightly burnt, XRP buyers who are now looking for stability.
Robinhood did see a huge spike. I think it was Robinhood when they added the ability to buy Bitcoin. And that they got a massive set of downloads. Revolut did the same. So that was a customer acquisition strategy that you worry about for consumers. Is it in the interests of consumers? And there is a really fair question. And actually, if you scroll back, if you're listening to this podcast now, to episode 270, we actually did a wealth roundtable, and we had the CEO of Free Trade, Adam Dodds, on the show. And some of the other guests were cross-examining him on exactly that point. And it was interesting to hear the different views in the room. So that's a really key point you make.
Yeah, buddy, go watch the show.
Well, there's also, and I know they've changed it recently, but I remember when I was kind of researching this topic, I remember when I signed up for an eToro account when they did their Bitcoin derivative. And there was this option to kind of follow other traders. And the way that they'd ranked the traders was basically like the highest performers over the last 3 days. So you got these people like massively leveraged, just like shooting for the moon. And so people were kind of following those. And then when I went back in today, it was like much more kind of risk weighted and like a lot more controlled. And so it looks like the industry's coming around to this concept.
Those sort of futures contracts and contract for difference platforms like eToro, like Plus 500 have come under a lot of scrutiny from regulators in the last 3 or 4 years. You saw they advertise with football teams quite a lot. They go after the punters and the gamblers, and that's really scary if that's your target market.
I mean, explain the difference there as well for the listeners, because I mean, I didn't know this until you pointed it out to me, but with eToro, you don't actually own the thing, do you?
Well, they do offer you the ability to own the thing, but they also offer you the ability to borrow money effectively from them or a third party, and have a contract that says if the price goes up, you can sell that contract and pocket the difference. But if the price goes down, you could be on the hook for a massive loss. So if you've got let's say 2 times leverage or a 5 times leverage, then you might have made 2 times your profit from the amount of money you spent. You might have made 5 times your profit. And we saw this originally with the FX market. But if you make a loss, then you've got 2 times your loss, 5 times your loss. And now you've got to find money that you didn't have in the first place to pay them back for something that you never owned.
And so that's where it gets risky. If you're looking at a chart of someone over 3 days and they're at like a 10 times ratio, it looks incredible and you follow, but actually the next 2 days they might be plummeting.
I think it's fair to say free trade's quite different to that. It just offers stocks and shares you've heard of. Even Robinhood doesn't, as far as I'm aware, offer leverage. No. So from a consumer responsibility side, it's there. What is interesting is that question about community and that collective sense of responsibility around education, because historically we said that unless you're a certain level of sophistication, you see this with crowdfunding platforms, then you can only invest so much money. And a certain level of sophistication either means 1, you've got a professional qualification, or 2, you've already got a lot of money, which you could be as smart as you want to be, but you don't have a lot of money or any professional qualification, and you're not allowed into the market. There is something about financial inclusion that these fintech apps are trying to go for, but it's always balanced with responsibility.
There you go. All right, we could probably talk about this one for many an hour, but let's maybe move on to the next story then. So.